We're not even talking about new highs without the resurgence in tech. Dee Bosa's here at One Market, as she always is, with what's been driving that comeback, Dee?
Well, a lot of it has to do with the AI trade being back, not just because of hype this time, but because investors, they're finally seeing enterprise deployment, strong infrastructure demand, and this is key, monetizable scale. Now, just consider some of the recent headlines over the last few days and this morning. OpenAI hitting $10 billion in revenue, Glean raising it a more than $7 billion valuation, Microsoft, it's at all-time highs, Google powering its own rivals. This is all part of the same shift that underscores we are still in early days. Now, take this chart from Goldman Sachs. Enterprise AI adoption, it surged this year, but it still remains below 10%. So it's still early, and that is where the upside is for investors. Now, look at the public stocks. Alphabet is up 8% since its I/O keynote. NVIDIA is up more than 20% over the last month. A lot of that on inference demand and sovereign AI, despite China challenges. And then CoreWeave, of course, the meme stock of the AI world, it's nearly tripled over the last month. The private trade, Scott, it's booming too. New valuations for darlings like Scale AI and Glean. Now, this morning's report about a new and surprising Google Cloud OpenAI partnership, that's also positive for the tech trade at large. It means that demand for AI infrastructure, it's outpacing even the biggest partnerships. If that lasts, that will continue to run this trade. But of course, when we get to next quarter, investors are going to again want to demand to see return on investment from all of these investments.
All right, Deirdre, thanks so much. That's Dee Bosa really setting the table for us. I mean, everything's up a lot since the April low. I think everybody knows that, too. But technology far and away the best. It's up 34% in comm services, up 26%. Big Technologies, Alex Kantrowitz is at the desk with us, too. The news that Deirdre brings about these new developments from the hyperscalers and the deals they're cutting really only underscores why money continues to flow to these names from investors.
Absolutely. With AI, what we've seen is that in hard times, it's an efficiency play. In good times, it's an expansion play. And so we now see leaders like OpenAI taking off some of the restrictions from the early moments where it could only work with Microsoft. It partnering with Google, as Dee mentioned, is a very big deal, right? Because now you see that it's able to take its leading technology and sort of spread it across the entire ecosystem, maybe outside of Amazon at this point. And that bodes well for any company looking to build with this stuff, because the real opportunity for growth here is outside of ChatGPT. It's companies that are trying to figure out ways to implement this in their workplaces and use it for that efficiency and expansion. If you have access, let's say you're a Google Cloud customer, and you have access to OpenAI now. If you're a Microsoft customer, you can get everything. An Amazon customer, maybe you're still working with Anthropic or Amazon's Nova models. This idea that you can now basically take the best in breed and implement it should lead to an expansion of building, whereas these previous deals have held it back.
What I think is so interesting, too, is that competition here is so fierce, right? We talk endlessly about an AI arms race, but you don't generally have arms races where you have competitors doing deals, in some cases, with each other. Despite the rivalries of the OpenAIs and the Alphabet, Googles, and what have you, you still, in some cases, have to do deals with your perceived rivals to get ahead. It's who has the better technology that you need to be willing to embrace.
Silicon Valley is all about frenemies. Right, you got to have these partnerships. Think about OpenAI. What they built, that was right on top of Google's innovation, because Google wrote the paper that basically ushered in this moment of generative AI with the Transformer paper. And so you have OpenAI building on top of their innovations, and Google is building right back. Every single company here pushes the cutting edge forward. They understand that there is room for a tremendous amount of growth throughout the entire ecosystem. You have multiple companies that are over $3 trillion. That doesn't happen if one company takes all the gains. So I think you're right to point out that you have to work with your rivals. And if you do, it's sort of like may the best technology win. And we see that there's a leapfrog every couple days. And each company that's trying to be the leader thinks that it has the capabilities to leapfrog next. And that's why they play this way.
It's so interesting, too, that what is the best technology today may not be the best technology, quite literally, not just figuratively, tomorrow. And that's the way that we need to think about all of this. You own Alphabet. Bren, you own Meta. They agree to take a 49% stake in the data labeling firm Scale AI for $15 billion. Our Dee Bosa confirming that, as she just did a few moments ago. So how about both of those stocks?
Yeah, I think about both of them a little bit differently. With Google, at Alphabet, we are a little bit concerned just about how the evolution of traditional search ultimately ends up and what happens to their business model. No doubt that Google has a ton of data that's incredibly important. They've invested a ton of money in AI. Gemini is completely legitimate and competitive in the marketplace. But what happens to their traditional advertising-driven search model? With Meta, I think we're seeing that the investments they're making in AI is paying off with advertising, and I think they were ultimately, that platform, I think, is positioned to be a continued winner in this environment where traditional search is being disrupted, traditional media is being disrupted from an advertising standpoint. So I think that when we look at a place like Meta, where they're making more investments now, I think we had an announcement just today about further investments in AI from Meta, I think partially to justify their CapEx guidance, which was higher last quarter. That's been a source of some controversy, but I do think the company is making the investments where they need to make them and is really positioning its model to continue to be a winner in this environment.
Back to the arms race, AK, Mark Zuckerberg personally hiring to create a new, quote, super intelligence AI team, according to one report today. What does that mean to you?
Well, Meta has been really working hard to further the state-of-the-art in open source artificial intelligence. But the problem is it hasn't worked according to plans. Llama 4, their latest model, was largely viewed as a disappointment outside and inside. So they needed something to supercharge that company. Now, super intelligence, that is a jargon word, it's a hype word. But I don't think we should look past what they're doing with this acquisition, or it's sort of like an acqui-hire-zition, because they're going to get 49% of the company. Alexander Wang is going to come on board. I spoke with him right before New Year's, talking to him about where he thinks AI is going to go this year. He's interesting for a couple reasons. First of all, he fits perfectly with that company in terms of his political adeptness. He has been very close to the administration. He speaks to the people they speak with. Now, maybe this is a weird data point, but he was on the Theo Von show, which is sort of becoming an indication that you're kind of in with that crowd. And that was a great episode. But also, his bet is very interesting. He's betting on using data to scale AI models. We talk a lot about NVIDIA and the infrastructure side, but there has been an undercurrent in Silicon Valley that if you don't have the data, it doesn't matter how much compute you have, you're going to eventually hit a wall. So scale is all about building that extra data source for artificial intelligence. In some cases, hiring PhDs to feed information into these models so the models get smarter. And if what Mark Zuckerberg saw was that compute is hitting a wall, remember, he has so many GPUs. They've had the lead because they needed them to optimize Instagram. If he saw that wall and said what we need to get to the next stage is going to be data, he just partnered with the perfect company. Yeah.
It's interesting, too, when you look at, as we say, this resurgence in tech has stocks really on the doorstep of a new high. We're talking 2% or so on the S&P 500. What was a terrible trade for a while has turned into a great one, and that's the semis. The SMH ETF is up 44% off the April low. Some of the components within there, it's just astounding the gains that we've seen. Microchip, a double. Micron, 74. onsemi, 70. And on. The SMH is up 5 of the last 6 days. Christina Partsenevelos follows this so closely. She joins us now with more on why these stocks are moving yet again.
Yeah, they're staging a comeback with, just to add more stats for the SMH, the ETF heading for its third straight weekly gain, driven by specifically strong earnings and shifting policy wins. So the biggest catalyst today is a White House official signaled President Trump could ease chip export restrictions to China in exchange for faster rare earth exports. So a rocks for chips deal that could help names like AMD and NVIDIA. NVIDIA's dominance got another boost when Huawei's CEO admitted their chips still lag U.S. peers by a full generation. This according to Chinese state media just over the last 24 hours. NVIDIA's CFO reinforced this edge just last week at GTC Paris, citing margin recovery and improving Blackwell supply. And that's why you're seeing shares up 22.5% just in the last month. And the momentum's spreading. Micron jumped 3% today after announcing they're shipping HBM, or high bandwidth memory, HBM4, 36 gigabyte samples to key customers, while TSMC gained about 2% on a 40% year-over-year May sales spike. TSMC now on its longest winning streak since December 2023. That's 7 straight days in a row. And then here's the key metric, Scott, to your conversation. SMH has really climbed 16% this this past month versus just, what, 6% for IGV, which represents software, and 6.5% for the SPY ETF as well, which really signals a performance gap and a clear rotation back into hardware as AI infrastructure builds and those geopolitical risk ease. Scott?
Christina, thank you. Christina Partsinevelos. Let's not kid ourselves either. You go back to NVIDIA's earnings day, which was so highly anticipated, and you needed that to go well for this trade to continue to work. It did, in fact, and that in many respects is why we find ourselves here today as well. Brenda, you own that stock along with Broadcom.
We do, and what we've seen, obviously, when NVIDIA reported, the market was in a much different place. But now we have, and when Broadcom reported recently, they reported a perfectly fine quarter, gave strong guidance. AI is really continuing to drive that story. Even the non-AI semiconductors stabilized a little bit more than I think everybody had expected. But the stock had a bit of a ho-hum reaction. So I think it's just telling that this group has come a long way fast, and the expectations are pretty high. Still believe that it's an important exposure to have in a portfolio, absolutely, and that there will continue to be ongoing demand as AI infrastructure spend continues. That both of those names will be very relevant and important, but have to be mindful a little bit of how far we've come, and that expectations just ratchet up as they get more expensive.
Malcolm, they may have come really far, really fast, but B of A, for example, and I'm assuming many others are still bullish on the space. They put out a note today because of demand trends, data center and AI-levered companies like the NVIDIAs of the world, the Broadcoms, the AMDs, and the Marvell. You own in the very least of that group, NVIDIA too.
And Brenda pointed out the fact that they've come so far so fast. I think it's really important to point out the fact that they're really pegged to, I would say, Broadcom and NVIDIA. Whatever direction NVIDIA goes, we saw NVIDIA's earnings basically touting the demand that still is there and their ability to ramp up production to meet Blackwell demand. Now we're hearing that they have to actually increase production even more to meet that demand, and that's a very positive signal for the entire sector. So I think it's still that same trade. As NVIDIA goes, so goes the rest of the semis trade. So I think investors should just be very cautious to pay attention to how fast this trade has run, and be concerned a little bit about how much further it can go instead of maybe considering the fact that this is going to continue to run at this pace throughout the rest of the year.